Hello, everyone. Welcome to the Market Breadth. I had to do a quick follow-up to my last blog post of the Market Breadth because there's some big developments happening. I just wanted to give a quick update and explainer. So if any of you have been following the blog, it's been increasingly hard to stay bearish on the market despite the technical signals that say so. And IWM, the iShares Russell 2000 ETF, which is the ETF of small caps, has been a main part of that. Um, Today was a big breakout day, as I anticipated could happen within my last blog post. IWM was up 1.8%. It's over the last peak, and it is finally gone positive for the year. And it looks pretty much poised to break out to a new high here, even though it closed well above the upper Bollinger Band, which is this line here. Now, one of the things I did as part of my slow transformation from going bearish to neutral, there's no condition under which I will go bullish, and I will explain more of that in the blog. But I did a calendar call spread on IWM with the target price of 204, and I just wanted to explain why I choose these types of setups really quickly. So these are two weeklies. Well, one is a monthly because it's expiring on Friday. And that's the short side of the spread. And then the long side expires next Friday. So what I'm basically expressing with that position is to say that I think IWM has a good chance of hitting 204 by Friday or on Friday and after. Now, if IWM shoots well past that, then I can even get into a small loss situation if the price move is way too big. But I'm anticipating that won't happen because IWM is already above the upper Bollinger Band. And so what the calendar spread allows me to do is to express an opinion that says, yeah, this is all well and great, but things are likely to slow down in the next few days before they pick up again in the following week. So we'll see what happens. But I just wanted to give that explanation as to why I set those up. And say IWM shoots well past that 204, sometimes I will reset the trade and do another one and see what happens. And we'll go from there. So let's take a quick look at Swing Trade Bot because this is the evidence that shows just how bullish conditions are. All the trends are up. This is the stock market recap for today, Monday, February 12th. And what I will do after this video is to click on a few of these technical signals to see whether there are a few things to check out. Now, those of you who are paying attention very closely see that there are some hints, maybe just some small hints, that the bears are about to get vindicated. And I'll show you two key things. The shooting star candlestick shows up for the Wilshire 5000 and the S&P 500. Now, the NASDAQ kind of avoided it, but it's pretty close to a shooting star candlestick as well. And I'll show you what I mean. So here's the S&P 500. And notice, I have to zoom in here for you. Notice what's happened. The S&P 500 opened, looks like, slightly flat with Friday. Buyers rallied it up, but then sellers were able to take it down into a small loss. Now, if sellers can follow through with a lower close, that sets up in my book, a confirmed shooting star candlestick, and that's a definite bearish formation. Let's look at the NASDAQ. This isn't the 100, but the NASDAQ had a similar shooting star candlestick pattern. So bulls are once again on notice. Again, if you follow the blog, you'll know that the bearish signals have worked, but maybe for a day or two, like here. This was like a big confirmation of the bearish signal I was pointing out, but buyers quickly turned right around and zipped the market right back up. So here we go again, another bearish signal. So just keep an eye out. And these are the kinds of things that make me very cautious, even when I'm buying bullish positions or going long on anything. We'll see how that develops over the week. So let's continue to my favorite technical indicator, which is the percentage of stocks trading above their 50-day moving averages. On TradingView, it's MMFI. I like to call it AT50 for above the 50. And you can see the downtrend is still in effect. So I'm tempted to just say I'm going to be a stubborn bear because of those shooting star candlesticks. But the momentum is definitely in the bull's favor for market breadth. And it looks like, let me stretch this out a little bit. It looks like, we will be overbought by the end of the week. And that officially would be the time when I flip to neutral, but I'm probably, yeah, let's just call myself neutral at this point, and I'll just see what happens from here. But once again, if it gets the overbought threshold and comes flying backwards, I go right back to bearish. I hate to churn the short-term market call, but the market is what the market is. Now, I also needed to follow up on some trades. And this is the one, Children's Place, which really drives me nuts. I know in the blog post, I said that it looked like hindsight that this gap down, which was about 50% or so for Children's Place, look like a very good buying opportunity just for a rebound, not for a long-term investment, but just for a short-term trade. And you can see this long jump that it had. What is this? Like almost 4 points, almost jumped 50% almost from the low. And I was just too slow in checking out what happened today. And you can see today it jumped up another 31%. Just so frustrating to miss this. And again, I know it looks like hindsight, but the trade here, if this ever shows up again on my radar, is that just go ahead and buy the open. If it gaps up, just buy the open, and the stop is below the open, or maybe you stop out if price gets back to the previous candle. If you do that, then you could just ride this thing all the way to the close and maybe into the next day. Now the gap between here and closing the post earnings getting back to the post earnings close is pretty small, so it's not worth the risk. So, I just have to put this in the history books as another lesson learned about moving too slowly on my ideas. Then another one I want to show you that's driving me crazy for a different reason is ARM Holdings. This has been one fascinating rocket ship higher. It's what I like to call an infinity stock because buyers seem to be insatiable when it comes to buying this kind of a stock, and it just goes up and up and goes to the stratosphere. It doesn't just go up in a few percentage points, it's going up in huge chunks. So I did a trade that I like to do on these if I want to see if I can scalp something, which is just do a covered call. And in this case, the premiums, of course, for options are extremely high. So it increases the odds of a trade like this working. There's, of course, risk to the downside, but the covered call gives me some cushion. I did not turn this into a collar because buying puts would defeat the purpose of me trying to scalp out the premium that's existing in the options without taking on oversized risk or risk that I wouldn't be able to handle. But clearly, this kind of stock is a buy the dips kind of stock because buyers are in full support. So whenever there is a dip, who knows when, you can see actually on Friday it did dip and buyers jump right in and put it to a marginal gain. But whenever it does dip to a reasonable support level, I will be there probably buying shares, either if it's more shares or resetting or refreshing a position. And then the final thing to show another telltale sign that I'm getting more, or I should say less bearish, is that my first Intel between earnings Intel trade in a very long time worked. And it was a calendar call with a 46 strike price. And it actually was a monthly setup. I didn't do weeklies because I thought that this pattern may take a while to develop. And I tagged it at 46. And Intel, the rally today put the stock, it hit my initial profit target. So I'm now out of the position with a decent gain. And you can see how Intel faded from the 20-day moving average, which is in a downtrend. So that's a warning sign. It's not bearish, but it is a warning sign. And I will just be keeping an eye on it. And if Intel sets up again, I will, of course, trigger. It will re-trigger my between earnings Intel trade. So that's the quick update. I hope that was helpful. I will also hopefully be writing about this either today or in subsequent days to develop these concepts a little bit more. In the meantime, Take care. Have a good one. And I'll check you out again on the market breadth.